Very good morning, everyone. Welcome to Admiral Markets. My name is Chris. We're going to take a look at the Forex market in this webinar live at the charts and specifically focusing on trend lines this time around. Okay, before we start the webinar though, be aware that this is intended for a global audience. It may not be suitable for everyone. Therefore, please take a look at admiralmarketsglobal.com, select your country of residence, and contact an appropriate entity. Also, trading for exchange in global financial markets is considered high risk and may not be suitable for everyone. Therefore, please seek the advice of an independent financial advisor for more information on that. This webinar is not advice and is for informational and educational purposes only. And by continuing watching this webinar, you agree with this disclaimer, plus you are aware of the risk involved when trading. Take a look at the Admiral Markets MetaTrader 4 Supreme Edition. A lot of extra additional features, 56 and more, that help the trading from alarm manager to a correlation matrix and sentiment matrix. So there's a lot of things regarding risk management as well. So you can find out more information on admiralmarkets.com. All right, let's take a look at the calendar. Tomorrow we got the big news event with the FOMC statement. That, of course, is something to be looking forward to in a way, or not. But it's going to be interesting in any case. Let's take a look at what else is going on. We had some meeting minutes on Aussie. We have pound inflation rate today, ZEW sentiment. That's going to be interesting to see all these data. Inflation rate on the US as well. Ultimately, the rate hike next month maybe seems suddenly more likely when looking at market commentary, at least considering the strong NFP figure. I guess that is the biggest impactor, maybe, or biggest impact. I mean, obviously, the Fed or FOMC were indicating that each data point is going to be important, and it's maybe a question of pulling the trigger, yes or no, depending on these data points. So if a number like that with the NFP, a big surprise to the upside, does occur, then I guess that's the reason why the market comments at least are increasing the likelihood of an interest rate hike in the US next month. It's going to be interesting to see the statement anyhow tomorrow as well. Let's take a look at the heat map. And then we're going to take a look at the charts. The heat map shows big movers. It's a bit off center at the moment. 1 second. For instance, stocks here, you can see big movers in stocks. There it is. Or stock indices like the FTSE here, almost 2%. And downside, you can see some currency pairs. Oil as well, Brent, WTI. But let's move over here and take a look at currency pairs. Pound New Zealand, nothing really exceeding the 1% mark or getting close to it, except the New Zealand dollar that fell probably the most, as you can see here, because it's the lowest one, which means it fell the most, almost 0.75%, roughly. The one that gained the most seems to be Pound New Zealand and dollar yen, as you can see, especially Pound New Zealand. Not only gained a lot, but it had a lot of volatility. It was always all the way on the right side, as you can see. The more to the right, the more movement it made as well. And New Zealand, as you can see, the euro, pound New Zealand, euro yen, pound odd, pound yen. Those typically are the biggest movers. Well, yesterday showed the same thing, in fact. And you can see here, they're slower movers that didn't move too much, either in volatility up and down or net change as well. So it's always interesting to take a look at this. All right, let's pull the chart here. We got a lot of, I think, interesting trend lines to take a look at. And trend lines are very useful in multiple ways. We can use them for trend channels to identify the trend. We can use them for filters because, if there's a big weekly trend line nearby, we might want to trade into it, right? Maybe want to trade away from it, but not into it. So that's something we can use. We can use it as breakouts. For instance, single trend lines, put it on a bear flag or support or resistance and wait for the break. We can put them on chart patterns, put them on triangles and either trade bounces within that triangle or breakouts from the triangle. And so trend lines are pretty dynamic because we can adjust them a bit, correct them as well. Um, so they're good in that. They're not as dynamic as moving averages because moving averages flow with the price automatically. But there is one advantage of trend lines is that okay, we have to adjust, we have to put the trend lines on the charts ourselves, but we can sometimes moving averages will not show resistance. For instance, moving averages will not show this particular trend line as support. So moving averages will sometimes not connect the dots that trend lines can. So I like to use both. Support moving averages are great in support and resistance. They're very nice, but they sometimes will not show certain trend lines that are very, very visible while connecting the tops and bottoms. But you wouldn't see them with moving averages. Well, yeah, you get my point. So we're going to take a look at a lot of interesting pairs. I think there's a lot of material to discuss. I'm not even sure where to start. Maybe with the dollar yen. It is a bull flag break, and I was talking about it in the video yesterday. I'm not sure if you saw it. The video I have here, it's part of the wave analysis. You can find it, weekly Forex overview, and it's always added on Mondays to the wave analysis section. Yesterday I was talking about the dollar yen bull flag, and it broke. And depending, on your exact price feed, I was looking for a 4-hour candle close, strong close near the high, right? So that could vary from trader to trader how the price feed looks like exactly. Some might get an entry at 123, some might get 123.16, stuff like that. So the trade has not gone up too far, as you can see, but the 4-hour world is looking bullish. There are bullish candles, and it is pushing up. So from that point of view, it's okay. It could be a bit more impulsive, perhaps, but the breakout is on its way. My target is 124.50, 124.40, let's say, which is the minus 272 target, and that's what I'll be aiming for. It's not only a minus 272 target, but it's actually also basically resistance on the left here on the daily chart, right? You got tops here around at 125 level. So from that point of view, it's looking like we had momentum here, obviously, and here, and you can see on the daily chart a correction down to that 38.2 fib of this momentum. And yesterday was a good daily candle, strong daily candle. So should see that follow through to the upside. So if anyone is not in that trade, let's take a look at the hourly chart, I guess, because its breakout is occurring on the 4-hour chart, daily chart. So I think it's okay to zoom in now to the hourly. And I will put a fib from here to here. That seems to be the breakout. Let me get rid of this 4-hour chart. And let's take a look at the hourly. And good morning, Caitlin. Good morning, Beverly. Good to see you both. And thanks for the welcome. Yes, definitely had a very good time. In fact, a bit busy, but good as well. It was nice to see Holland again after I wasn't there for many, many years. And so it was good to see people, my friends, family. It was good to eat certain food that I don't eat here that often, like fish and Dutch fries, French fries, and and other snacks. I met Nennet for the first time, by the way, after 3 years almost. So that was very cool. We met in Amsterdam. So that was really fun. And some other people from Admiral Markets. I'm making Caitlin hungry at the moment. So yeah, we had a really good time. It was good to catch up. We spent the whole day. Only one day, unfortunately, and then I left a bit earlier, uh, but on Saturday, then on Sunday. But yeah, it was fun to meet Tarantula FX. He's a big guy. He's tall, and you can see he works out in the gym, so you feel safe with him. Yeah. Nah, just yeah, that's true. But uh, it was fun to primarily it was fun to meet up. So let's take a look at this hourly chart. Um, yeah. Well, maybe a bit true. Yes, indeed, Caitlin. Maybe a bit. Nah, just kidding. He's a very nice guy. So hourly chart. I think that a correction here to 38.2 fib could still be a very good bouncing spot. 52. I think an entry there could be good. If someone is in a trade already, two options with stop loss. I think just leaving it below the bottom, depending on where your original stop loss was, obviously, or moving it below this candle at 50 fib, 122.83, 81. I don't think more space is needed. I mean, okay, or could hit the 61.8 fib too, and the trend line here. So stop loss could also be put at 122.70, by the way. So we got three options, I think. Bottom, 122.70, 69, 122.83, or even 123.13. If you really want to put it tight, you can even put it below this 4-hour candle low if you want to trail stop it. Very tight. Those are trade, I mean, trail stop potentials. Anyone who is in that trade I talked about yesterday. If not, then I think looks like at the moment, obviously we see very small candles here. We see 1-hour candle pretty big at the moment. Could be an indication we're going to see some kind of retracement at this moment. Let's see. In 2 minutes, we'll know how this candle looks like. It'll be interesting. If it does look anything like this, then that could be. You can see it's kind of losing a bit of steam in its momentum here, especially in this last part. Some doji, smaller candles here, and if then one of these big candles to the downside, to the opposite side, all of a sudden appears, well, I think it's safe to say that there is a good chance of retracement down. Well, I think that 38.2 fib, 50 fib still very likely candidates for an upside. Max 61.8. So I think those could be interesting long potentials today. So there could be pending orders actually at those levels with stop loss either below the 61.8 as a new trade here longs, stop loss here or here. Putting it below the 61.8 is always a bit of a risk just because we're putting it in the middle of the playing field. You actually shouldn't be putting stop losses in between the fibs, but yeah, if the stop loss is on the wider side, then it could be still a tactic to think about. And in this case, I think it does make sense. I think I'm going for that. The one below 61.8. I don't think it makes sense to live through retracement all the way down to the 78, all the way down to the 88.6 fib. It could still be bouncing from those levels, but if it goes that deep, it really invalidates kind of the whole vision of this dollar yen going up to 124.50. So I think the tighter stop loss makes sense. The fifth day, by the way, that didn't break this high as yet, so it's still okay. So to buy up indeed, I'm looking for buys longs because of the breakout that we had, bigger breakout of the remember the big entire weekly zone that we had here. So we're out of that. Good weekly candle here. Good impulse here. Good daily candle here. Correction of a bull flag here. So yeah, yes, definitely looking for upside in my opinion. And this is the fifth day. So it's okay still, I think. But if the retracement happens today, this is the day 6. So if the break tomorrow, let's say tomorrow, if we're back in the same webinar and the price is still lingering around this area, I might take it off and just close the trade, because today I think that should break this high. Let's see, 123.50. So in my opinion, it should retrace. It could retrace today. Looking at the hourly, it seems likely, but it should bounce and continue today. If it doesn't happen today, then I would probably take off the trade tomorrow. If the stop loss is not, if the target or stop loss is not hit, obviously, and would market exit it for whatever, plus 2 pips, minus 5 pips, whatever it might be. So there's a kind of a timer to this trade. All right, let's take a look at what next. Let's take a look at the majors first. Why not? Okay, yesterday in my video I was saying that I was looking for a break below 106.70. Looks like we're getting that. And because otherwise I was still thinking that a pullback or retracement up to the 50 fib could happen and would be a good short, I was saying. Because it's a 50 fib, first of all, it's a downtrend, and here's a supply demand zone as well that acts as a resistance. Price didn't get up there. Would have been interesting if it did. It didn't. Now it's below 106.70, below this bottom. And therefore, I think this is a breakup potential down to 105, which is a psychological level. Perhaps a small extension down to 104.50, which is the yearly low and the weekly bottom as well. And monthly bottom, perhaps, probably, yeah. So big monthly, daily, weekly bottom at 104.50 and yearly low as well. So 104.50, 105, obviously big zones, big support levels. Shouldn't be aiming for lower than that. Any shorts to target there. Not assume that price will go further than that. It could break below it, but probably after a bounce. And if it does break below it, then there could be a big weekly / monthly downtrend continuation that I don't expect today. If anything, maybe during FOMC because of the news event that could push it through. And yeah, if it does break, interest rate obviously increase could push it next month. And yeah, that could be a big breakout. It could fall to parity, probably below parity eventually as well. In the meantime, let's take a look at that breakout of the 106.70 bottom. Sorry, let's see. This seems to be, this is actually an impulse as we speak. This is one continuous move from the 50 pullback. As you can see here yesterday, there was a 50 pullback right here. From this green top to this green bottom. And we're reaching the minus 272 target. But that should, if this is a proper breakout, that should not really be much of a hinder or obstacle for further downside. So I think that shorts are definitely interesting. And I would not look for a very deep pullback before I think shorts make sense. So now I'm going to do some research and see what kind of level might be a good, might be worth shorting for this euro dollar downtrend continuation. I think it's a good break. We got a 4-hour candle below it. And we got a candle below it. So I think there's a good chance of continuation. Let me take rid of these fibs. Regarding trend lines, that is the focus of today's webinar. This actually is the trend line break, or this, depending on how you draw it. Right, there was already early signal of a break here, in fact. with this one, with this trend line break. But there's a re-break later on, as you can see. Let me adjust this a bit, like that. All right, that's the trend line break. Of course, that break already happened, so now we don't have any trend line breaks left. But we have this resistance line acting as a nice guidance for the angle of the trend. We have the green line as well, indicating the downtrend channel that is apparent under your dollar as well. You can see connecting these bottoms would give you that angle of the channel. Oh, let me adjust this color-wise. There, the green lines indicating that channel. All right, so we got the green channel, the green trend channel on the 4-hour chart. You can see that that's how it looks like on the daily chart. We already had a trend line break on the daily here a long time ago, and that's still actually in a breakout to the downside of that trend line. And we broke this horizontal support already. Now we're going to the next horizontal support, or getting close to it perhaps, within this downtrend channel. 1-hour chart, we had a consolidation here. As you can see, that consolidation is broken. So let's dive into the 50-minute world now, because I think that's now an appropriate time frame to look at, considering the breakout that's occurring, and we will probably see an hourly continuation, I would say. Well, you never know, but that seems most likely at the moment. Let's see. All right, let me go to the 30 minutes quickly. There's a bit of a top and bottom here, and trend line. Small little supply and demand zone on the 50-minute world. Impulse, sideways impulse. So that could be a good zone. You can see it on the hourly chart too. Now that might be still a bit deep, but if it gets there, 106.80 could be interesting. I think 107 already could be enough as a stop loss above 107. 106.80 could be a good resistance zone, but yeah, will price even retrace to that level? It's not far, it's only 30 pips away, but it still might be too deep. And that's something we never know, of course, but that seems to be a good level to me. Let's see, on a 5-minute world, it's actually already continuing a bit. We saw break, pullback continue, as you can see, when connecting these bottoms. Break, pullback, continue. Could be good to look at this 4-hour candle too. If this 4-hour candle closes something like this, then the chance of price getting up to that area might be decreasing. I think a stop loss in any case above this candle high is always a good thing. I think above 106.90. That's this candle high. But if this candle, the current candle, closes something like this, then I think an earlier entry would be merited. Maybe around halfway that candle, but still with a stop loss at 106.95-ish, above 106.90. But this candle is still open, so I think I'm going to wait for this candle to close. Then we'll just take the retracement of that candle. As long as it doesn't close, I'll rather wait for the 106.80 level, 75 level, let's say. I don't know, that's my 2 cents. If you have different ideas, let me know. But I'll let this 4 hour candle wait. I mean, jumping in a short right now is um, might not be bad, but it depends. If this candle closes something like this, then I'd rather wait for an entry about halfway this candle probably. So that's what I'll be waiting for. The 4 hour chart. Pound USD, yeah, not every day, Ligia, but on Tuesdays, Wednesdays, Tuesday, Wednesday morning, Live Trading Lab is one of them, and then Strategy is the other one. And we got also webinars on Monday, Wednesday, Thursday, but that's in the evening GMT time or late afternoon, not morning GMT time. All right, let's see. Pound dollar. I think this could be actually it's a bit of a slower break, but it is a break. Got a 4 hour candle below it, so it looks like a good short right now. It's retracing the 4 hour candle already, hooking back to that broken trend line. I like the potential here of downside. Let me take a look at a few more charts. We already broke yesterday's low. Doji 2 days ago, looking like price action is turning. Bearish day yesterday, breaking through this green kind of triangle. Couple of 4 hour candles already being bearish. So I think from that point of view, everything is in play what I would like to see. So even a short right here, I think is merited. The other option could be a 1 hour candle like this, bearish, or on a 5 minute chart even, wait for a 5 minute hook back, something like this, and a hook back here to about halfway, and that could be then a weakness with a lower high. So there are a couple of options here. Stop losses, well, let me take this trade so I can put it on the chart. Let's see. Daily high yesterday, I think is okay. 152.30. $152.30 stop loss. Beverly has 152.41. 152.41. Yeah, that makes sense. I think 152.35 is also okay. I mean, small difference anyhow. 33 perhaps. Yesterday's high, I think, should be sufficient indeed. Target 151.40. Yeah, that seems to be definitely a target that's achievable, and that should not be too difficult to reach. I think you do see a bit of a sideways zone here at around 151.25. So at the moment, that would give 53 pips risk, 55 targets, about 1-to-1. So a small pullback to perhaps, no, that really doesn't matter that much. No, 1-to-1 is still okay. But that could be just one target. The other one could be to because this ultimately I think has a chance to fall down to 149.16, which is the minus 272 target. So that 151.25 could just be a small bump in the road. Doesn't have to be the main target. Could be half the trade could be closed there and half at minus 272, and that definitely bumps up the R2R reward to risk ratio, which is probably the best thing to do. All right, so this is a um, pound USD potential, I think, to the downside right here, right now, or on hourly chart after 45 minutes, the hourly candle closes, or with the 5-minute hook back. Depends how many details you want to go into. But it looks pretty good. It's a bit choppy, consolidation zone, but I think it's still fine. And looking like a potential continuation. So we got the dollar yen hook back, I would say, as a trade setup. We have the pound USD here, and we have the Euro USD potential. So I think the majors are showing some interesting potential here. All right, let's see. Oh, let's put this on. You can use the mini terminal to calculate the risk. You can use it saying, um, the stop loss and the things, the TP, the lot size you can calculate therefore. Very useful regarding the size. So you can click here, sell. If it's a market order, you can say what risk you want to take. If it's a cash risk or equity or balance. For instance, 0.5%. Stop loss is about, in terms of pips, we can do that. It's about, we know already, we calculated it, so it's about 55. Take profit, I'll leave open. Trailing stop 2, but you have different options there. And then place order. Oh, I forgot this options here. Oh yeah, I'll do that later. Let me take it like this. No. At 82. Now the daily high, let's see, 29. 29, and I have it at 30. I'll put it at 30, 33. All right. Now, let's see. This breakout might not work, so what kind of signals might be visible, visible to get out of that trade if it doesn't go into the direction I'm hoping for? In that case, if this hourly chart does not continue and break this low within the next 5 to 6 candles, and this is the second candle, so basically it has this hour and another 4 hours to continue and break this particular low point, which is 151.65. If it doesn't, I would take a market exit and then reduce the loss to, or maybe it's a small profit or a small loss, most likely. Right, so that's my time point to get out. Now the audio USD is interesting too because it has, so that's the pound USD, that's the majors. Let's take a look at some others. The Aussie is interesting as well. It has a resistance trend line and a support trend line acting nicely, and I'm looking for a break of one of those two. In fact, not jumping in a trade right away, but if it does break those trend lines, then would be interested in zooming in and keeping an eye on this pair on an hourly and 50-minute chart. An upside break, I think, could be targeting 75, which is the minus 68, 61.8 target, and a bigger actually resistance zone on the daily chart, right in here, as you can see, and the fibs. So that particular breakout zone is there to the upside. To the downside here, once it breaks below the trend line, support trend line. So nothing much really to add to that. I think that's it. And no particular trade ideas besides, just keeping out those trend lines, and would be interested perhaps in trading it once it breaks, but not jumping in trades, like not putting any pending orders right now. Downside target, I think, is the, first of all, the minus 272 target of this fib, this daily fib, 50 fib hit. So 66.50, maybe 63.20, which is the minus 61.8. Right, so upside target the 61.8 at 75, 74, 90. Downside 66.50, 63.25, minus 272, minus 61.8. And it's going to be interesting to see whether the support or this resistance breaks. All right, Kiwi actually was looking like a bull flag we were talking about it 2 weeks ago. And the bull flag, well, it didn't break. The bull flag did not break. And from my point of view, at least, the time factor helped me on that one, because when it looked like it was breaking, I knew, or at least my time factor analysis said that timing was not yet ready, and they need to make a pullback, and then perhaps we could get the break. It made the pullback, in fact, but it didn't continue up. It just continued down, in fact. So time factor helped me stay out of that long side, and Kiwi actually crashed to the downside in a way with a good bearish momentum, and didn't make the break to the upside of that bull flag. Sorry, it seems to be somehow not responding. Let me restart that. Bear with me for a second. As I restart this terminal, it's sometimes acting up. I might have to re-download it. I think it's acting up a bit somehow. Maybe I have too many indicators and templates, I'm not sure, but in the meantime, so that's the Kiwi. So now it made a big impulse. You can take a look at the Kiwi on your own chart. Made a big impulse, made a correction, broke that correction to the downside. So showing some, bearish impulse, correction, bullish correction, and now bearish continuation. So that could be something for downside. Take a look at that in a second, as I said. Regarding admiral markets, by the way, can you still hear me, by the way? I hope everything is okay. Regarding the sound. Okay. Cool. There. Finally closed. So, regarding admiral markets, take a look. There's also technical analysis. Besides wave analysis, Nennet wrote something yesterday here on your dollar, saying that he thinks it's very bearish. Let's take a look at that. Chart of the day as well. You can see here your dollar downside. So there seems to be a agreement on the technical side of things. According to me, I think this is Anil that wrote this chart of the day, and Nennet. But you also have fundamental analysis, by the way. So there's a lot of content you could take a look at. Yesterday, another busy week for the Forex market pairs, and you can dive into the fundamental side of things and what's the future for U.S. interest rates. As you can see, that was all yesterday. Let's take a look at Nenet's technical forecast, we see he spots a bear flag too, just like we did correction. His recap mentioned 108.35. 106.70 is strong support, he says. So let's take a look at that. Looks like we're below it at the moment. 106.70 is the bottom, the previous bottom. Okay, so let's take a look at that dollar, Kiwi dollar, sorry. So the bull flag was here, right? And this was the bottom, broke that bottom, made two impulses like this and started to correct sideways, right? So anytime you see correction after an impulse to the downside, you got to really realign your vision, because in those cases, even though a bullish turnaround or breakout might eventually occur, you just can't keep clinging on to the bullish kind of version here. And it still might actually bounce off support. I mean, not saying that that's not possible, but obviously when a break of that support like this happens with that momentum, the environment is changing. This was bullish environment. This is bearish environment. So that's, I think, a very clear distinction that we have to make as traders. And that's something that can be a bit of a danger if one keeps clinging on to a certain trend forecast maybe too long. And this looks like a good breakout, I think. You can see already a mini pullback, break pullback continuation here off that trend line. And a descending wedge in a way. Flat bottom, descending resistance. So what kind of pullback might merit a short? Let's take a look, looking at various time frames, trying to see which one might make the most sense. I think that for our chart, looking at these candles, could be probably already a good short, just like the pound. Looking at this, I think that a stop loss above this top should be okay, 65, right? That's two candles higher. It's this bottom, it already acted as resistance. So if it gets there, it should be a decent chance it rejects again at 65. Now, the fact that we already have two candles away from that level is showing momentum continuation, and I would not expect really price to get much higher than 64.90. So anywhere between here and 64.90 could be downside continuation. But what is the chance it really gets up here? Might not be too high. I mean, it could just simply retrace this candle and post yet another inside candle, and the next one could be bearish like this. And then maybe again a doji, and then again a bearish one. Until we fall so far, maybe that we'll see a rebound that corrects this entire swing high, swing low. Let's see. Let me put on the moving averages here. I want to see how many candles have moved away from the moving average. And I want to count how many have been in an impulse. Let's see. 8 candles. I think the kiwi is also a short, probably right now, in fact, but just want to double check if I'm missing something maybe from my vision, at least. Oh, there is a bit of divergence perhaps on the 15, but it's only a single. Well, if you look at the hourly, we do see a bullish candle. So from that point of view, might get a bit deeper retracement. And actually, we're seeing a small little consolidation zone. Maybe it'll pop up, hit the trend, the moving average, and then go down again. That could be good for shorts. Because if I look at the 4-hour chart, I think it's interesting, still an interesting zone for shorting. It did move away from this consolidation zone already a bit, but I think it's still okay to look for continuation. Right? This is not catching the initial breakout, but that's okay. But on lower time frames, because of the 50-minute divergence, maybe perhaps a small retracement to, let's see, to any of these fibs probably. Could be a good shorting zone. So it depends. This could just be a small consolidation and it could continue like this as well. Or it could spike up and hit the resistance fibs and then move down again. In any case, stop loss needs to be above this certainly above 65, I would say. Definitely in the shorting zone. As I said, one option is right here, right now. The other option could be a pending order or market order at these levels. A third option could even be a breakout below this, but that could be another opportunity. Yeah, those I think um, summarizes the kiwi. This seems to be, in any case, tradable pretty soon. Aussie probably has to wait a bit longer. Pound is falling indeed nicely. We have pound news, of course, still in an hour, is it? Less than an hour now. So still some time, but something to be aware of, by the way, as we already talked about earlier. Pound, though, getting a very good kick here indeed, as Beverly is saying. Falling 22 pips in the meantime. That's nice. That's very nice. It's always good. Obviously, if it falls quickly or goes quickly in our favor, um, that's always a great benefit, especially with the news event coming around the corner. So that could be very useful. Um, so I like the impulse, obviously, showing some strength that is good to see on this breakout. It'll be good to see how this hourly candle closes in 25 minutes. All right, got a lot of. I think I don't know why. Maybe it's me. Maybe it's the market. But I see a lot of interesting things going on today. Um, dollar CAD 2 got a lot of trend lines. In fact, got this support line, this support line. We've got also some interesting resistance trend lines, like this, for instance, right? and the fact that this top is still in play, that this head and shoulders actually still in play with this level here, this head, and then this shoulder here. Got this support levels even to think about, bigger support trend lines. Right, so we got various degrees of support. If you see on a 4-hour chart, you can see a fan in a way with short-term, intermediate, long-term support trend lines. And it's a very, well, it's a very interesting spot because we're right at that head and shoulders level. We're making a rising wedge as well. Yet we've been moving up an uptrend that seems to be slowly dying, as you can see. So upside, I don't think is really interesting unless it really traces either to one of these support trend lines or maybe breaks above. Eventually, it could be interesting if it just breaks above this top. Not to jump in a trade, by the way, but then it becomes a bullish environment. Downside is a reversal trade. It could still be worth it. Let's see. It's risky though, but this is 6th week. They're not breaking this top. So from a time factor point of view, I think we're going to see a bigger correction on dollar CAD. But who knows with FOMC tomorrow? I don't know. Probably not worth trading, but it is interesting just to analyze this one. But I'm not sure if I really want to trade it. Let's see. This is fourth candle not breaking this top. Well, either a sixth candle not breaking this top could merit a short, or a good candle close below this trend line could merit a short. But I really doubted that I would take it. But it does show reversal potential. It might take it. Might be interesting to take. Not sure if I will do it, basically, but it could be a reversal area um, from this head and shoulders point of view and rising wedge point of view. The signal could be a candle like this pushing through the trend line, or 5 to 6 candles not breaking this top. All right, TP on Kiwi. Well, we got bottoms, of course, here in play. That's pretty far from now still, though. Let's take a look at fib targets as well. Let's take a look at all right, we just hit the minus 61.8 target, but it's actually pushing through that minus 61.8 target. So next target minus 1,000 perhaps on a 4-hour chart, 63.75. Let's keep that in mind. Let me now look at the hourly. Again, just recently hit the target, but going through that. $63.60, $64.20. $64.20. All right, let's put a fib from here to here. 63.77. So I would say 60. I would go with the 78.6 fib. I think it's 63.80 probably. 63.77 is the 78.6 fib. Looks like a good fib so far. Has been respected to 38.2 fib 50, 61.8 roughly. From a fib secrets point of view, 65.80. Just doing some math here. Yeah, 63.80 looks, I think, that's 78.6 fib, I think. From various fib point of views, I think makes the most sense. What do you think, Beverly? Do you see, maybe you're looking at the pivot points or Camarilla points. Do you see the same? Okay, cool. So euro yen, I got an interesting euro yen and pound yen, I think, too, to discuss. Euro yen, I think, interesting could be this trend line and this trend line and this trend line. So basically making kind of a channel now, or perhaps, well, it's not really a flag anymore because it's retraced too deep. Let's take a look how far it retraced. It's at the 61.8 fib at the moment. So I don't consider that a flag, as you know. Typically flags, I like to see bounce off 38.2 fib. Rectangles often bounce off 23.6. A flag, well, max 50, but shouldn't go below 50. Otherwise, it's a channel already, I think. So this is more of a channel, but could still obviously break, and we can get the bullish breakout above it. Here too, a head and shoulders potential at this particular resistance line, left shoulder here. That's where the line is from, and the support trend line. So from a long-term point of view, the break of the support trend line is needed, or the break of the resistance line is needed for upside. And here could be resistance point for downside. But if it does break, there could be upside breakout. So not something maybe for today, but long-term potential, I would say that here are the up and down potentials connected to the weekly chart at least. Now we are at the bottom of a support trend line, so could that be a bouncing spot for upside? And I say maybe yes. Yesterday was a doji right at that support trend line. There is divergence between these bottoms on the 4-hour chart. There's been 2, 3, 4, 5, 6, 7, 8 candles not breaking this bottom. So there could be a reversal potential, I would say, on the euro yen. It's right now at the 61.8 fib pullback. Could be one more correction up to, for instance, the 132.60, the minus 272 target. And there's a lot of resistance at that level too. So that could be a reversal trade. Now, one option could be just to wait how this 1-hour candle closes. There was a strong bearish hourly candle previous hour. So waiting for this, maybe waiting for it to become bullish or a pin bar. could be kind of a extra signal or confirmation that price is respecting the 61.8 fib. Certainly will depend how this euro dollar is also behaving. Obviously, if the euro keeps pushing lower, which it is doing now anyhow, it might not be a good idea to have that euro yen. It might be better for the dollar yen long than the euro yen long. That's something to consider. Really depends, I would say, on how this 4-hour candle closes. If it's something like this might not be too good. Might retrace deeper, might go down to the 88.6 fib, but still could be good to keep an eye on it, because if euro does not make that downside, then your yen could bounce and retrace deeper, and maybe the 61.8 not deep enough, but could keep an eye on these deeper fibs, especially looking at the 4-hour candle as it is looking very bearish. So it might retrace deeper, might retrace. Keeping an eye on these 88.6 maybe primarily. Could be low, kind of small stop loss, but decent reward potential. Could be a bouncing spot there. Otherwise, I don't really see trades based off this daily analysis. Really, to the downside, at the moment I don't see it because it's too close to support in two ways. Would have to go up maybe to, for instance, this minus 272 target. That could be a bouncing spot to the downside, or the minus 61.8 target. Pound yen has I left these trend lines on actually like this, and we were talking about it 2 weeks ago about this rising wedge. It did fall but went back to support. It was a bit of an overthrow here, but ultimately this channel survived. Price remained in this channel, bounced back up, and is slowly kind of building an ascending wedge. Let's take off those rising wedge trend lines here. And they're looking at flat resistance in a way and angled the upside. So yeah, that looks like a bit of a ascending wedge perhaps. Could get a breakout to the upside to retest maybe even this top. Could be a bullish breakout potential. If price does break through this channel, then obviously there could be a bearish potential back to support or below. That's how the daily looks like, I think. 4-hour chart. Still in the resistance zone. So going long here does not make sense, I think. Too much resistance. Going short does not make sense. It's in the uptrend channel. But the trendline formations are interesting, and there could be something maybe developing soon. Maybe if price gets back to support within this uptrend channel, it could be still interesting. 186, 186.50 could be a zone maybe to look for a bounce. But it shouldn't break this 186. If it breaks through this bottom, then that could be a signal that price is going to make a retracement lower, in fact, because there was a bit of impulse here. Still didn't break that top, and there could be then the potential to go down to that trend line. We could put a fib actually on this swing high, swing low in that case, and price can go down to the minus 272 target at 183.20, which is equal to that trend line as well. So if it breaks this support at 186, there is potential here, I would say, to fall down to that and then bounce here again. Whereas if it bounces here, there's a potential maybe to go up again. That could be maybe interesting 186 zone to look for a bounce or break, I would say, on this pound yen on a 4-hour chart, or yeah, 4-hour, 1-hour chart. So that's what I have in mind to keep an eye on with the pound yen. Price bounce after 23.6 fib. Let's see if it can get down to the 38.2 that I want. All right, let's see. Pound odd. We got a lot of moving averages on. That's my typical moving average template. So let me use the simple one because focus should be more on trend lines today. There. Well, I think it's pretty straightforward. We got a triangle slowing down, contracting triangle formation. We could draw plenty of trend lines, in fact, support like this, resistance like this, support like this, two layers of support resistance, one closer, one further away. And we got even daily trend lines. So there's a lot of consolidation going on. Like that, right? Trying to connect multiple tops, multiple points, because a trend line with multiple hits is stronger, as you know, most likely, if you've been here before in the trend line webinar at least. So yeah, that's when we look at all the daily and 4-hour trend lines, it looks like this. So quite choppy, and yeah, ultimately I think that it's going to take a while before I find this interesting. Probably 217 or 211 needs to break. It's quite a wide zone. Within that zone, maybe if I zoom into the hourly, do we see something? I don't know. I don't see much. Maybe I missed it. If you do see something, let me know. But to me, it was not really something that sparked my attention this morning. And when I look at it again, it still doesn't. So, but if you see it differently, you know, that's the cool thing with everyone having their own vision on things. Sometimes we see things differently, and if you actually tell someone else, they could agree or disagree, obviously. Your odd is kind of the same thing. It's in this downtrend channel, but it's a bit of a weakness here with no continuation. It is moving down on the daily 4-hour chart. It's just a bit of a slow grinding downside recently. Don't see much there on this chart. We can definitely take a look at the Dow. Let's do that right now. There it is. Let me see if this is I'm not sure if this is actually a fresh chart. 1 second. Okay. So we got, let's see, monthly chart. 1, 2, what was it? 6 month, 2, 3, 4, 5, 6 month. This month. Last month was fifth. It was bullish, so it's hanging in the air in my opinion from a time factor. But not that I checked my time factor rule that much on the equities market, so maybe it's not as precise. But yeah, it is the 6 month, so it's going to be an interesting month, I think. Is this a pullback for more downside, or is this an uptrend continuation? And if you look at this uptrend, actually, since what is it? Here, this is 4 years ago, we've never had this long of a pause, not making a higher high. I mean, normally we've had every month a new high, with the exception of here 3 months, here 2 months, here 1 month, here 2 months, 3 months, roughly 1 month. So yeah, this is quite a new thing for relatively compared to the 4 years at least. We had here actually 1, 2, 3, 4, 5, 6, 7, 8 months not breaking the high. That was back in the beginning of 2011. Before that, actually, it was 1, 2, 3, 4, 5. Here a small pause. So two small pauses. Otherwise, all upside continuations since the dip and the low due to the financial crisis in 2009. Will this be a third pause like this for more upside, or is it signaling maybe a bigger correction? I think that I don't know the answer. It's in question in my mind still. I think this month will be interesting to see how this monthly candle closes. Last week, obviously, pretty strong downside, but this month still has 2 weeks to go, so 10 trading days left. So it will be interesting. From a fundamental point of view, well, the interest rate hike yeah, normally, I mean, interest rate hikes typically hurt stocks, right? Because bonds are more attractive. But in this case, who knows? It's a new environment, I would say. Obviously, interest rates, if the rate goes up and the whole world is going down, investors might go to the US dollar, might change into dollars. And what do they do with those dollars? They might invest in the stock market. So, the interest rate up might actually help stock market. It's uh, it's a mind twister, maybe. It's a new environment, in fact, from many points of view. So I'm not really decisive on this. I'm really just don't have any opinion, really very strong opinion on this at this moment. I'm gonna just keep an eye on it and see how it goes. Seems to be in a mixture of everything. 4 hours down, 1 hour is up, daily up and down at the same time. Support is close by, resistance is close by. Once in 7 years retracement. Yeah, it was about 6 years ago, isn't it? Now 6.5. So half a year from now, it's 6 months. S&P is showing the same thing. Gold, yeah, it's about to challenge the bottom, maybe break the bottom. Let's see how many months is this already. It is the fourth month, so it's would make sense from a time perspective at least. And the upside rally really didn't get too much footing at all. I thought it would go a bit further. Only went to the minus 272 target, and that's always a bit of the, as I said before, be careful with those bull flags. Sometimes if you have the bull flag, like first of all, probably like this, that break, false break, unfortunately, no way, maybe in this case to avoid it, I guess. Then later on, this bull flag is valid because we moved the trend lines, obviously, and that bull flag broke, and that can happen. Sometimes bull flags or bear flags break to the opposite side. If you see impulse breaking through the other side of the flag, you know, be ready for a game changer. Be ready for a different environment. And you can see that when that happened here, we did get a big impulse to the downside. Alrighty. Well, let's see, what time is it? It's actually top of the hour already, so we got half an hour left before the news event. Let's see, Beverly was also, by the way, thinking the same about the Dow. Maybe we can take a look at the DAX quickly, but also had a bit of a hesitation with the view on that. DAX also similar. It's just not as high as the Dow. In fact, kind of the same structure. So top of the hour. Let's see. Anything that's on my mind? Top of the hour. I don't think so. Only this dollar yen maybe. No, that was not it. The pound dollar. Yes. Good bearish candle. So nice. Of course, there is a news event 30 minutes from now. So depends how you want to look at it. Uh, safe thing to do is always to close at 10, 15 minutes before the trade, and you probably got some profit here. Um, Other option could be to just leave the stop loss. Another option could be to trail it. Trail it could be, I think, a bit risky because of the volatility, perhaps. Let's see, euro dollar still hasn't closed that one yet. That 4-hour candle, looking for retracement if this 4-hour candle is pretty bearish. Dollar yen looking for a bounce off 38.2 fib. Kiwi looking for a short at 64.75-ish. Or on a 15-minute chart, perhaps if it breaks this bottom. Target 63.70, 63.80. Dollar CAD could be in a retracement. Euro yen, maybe a bounce off the 88.6 fib, big maybe. Pound yen, maybe 186 bounce up or breakdown. In fact, I think that's about it what I was talking about so far. So if you have any questions, let me know. In the meantime, let me show you the webinar schedule. Yesterday, Nenad had his weekly recap, so maybe you already had some ideas from him. Tomorrow we got strategy. Take a look at, I think, price action tomorrow again, like we did 2 weeks ago. And Wednesday evening, Nenad's going to take a look at multi-time frame stochastic system. And Thursday together, we're going to take a look at different ways of trading the volatility slowdown, on Mondays, early Mondays, Fridays, late. We're going to take a look at that type of trading on Thursday. That's all at 5 p.m. GMT time on Wednesday and Thursday, and tomorrow, same time, 7:45. All right. Otherwise, take a look at IBO Markets website. You can find a lot of things under analytics. Also, market sentiment, where you can see the percentages of sentiment here, looking at what type of trades up, down on these currency pairs. You can see, various statistics here. All right. Among others, also market heat map and the analysis I already talked about. Alrighty, well, thank you so much for hanging out here with me. I hope you had good trading, and looking forward to talk to you soon. Cheers.